a very important question is, do you want to position yourself for the data that you've already seen, namely the strong survey data that has come out already, or what's likely going to happen going forward? And so what you have right now is that surveys of economic confidence are consistent with around 3% GDP growth in the euro area, at a time in which 2% seems more likely, and your trend GDP growth is 1%. So if you think these surveys are too high now, then you want to position yourself for a slight pullback. We see around 3 points downside on euro area PMIs, and if that really happens, you want to position yourself defensively, which is ironic because everybody is aware of the strong backdrop. But if you think this is running too high, our surveys are going to pull back, then you want to be long things like pharma, food and bev, and you want to be very cautious on banks, which ironically is one of the strongest consensus overweights right now.
Oh, come on, you're telling me the hangover's going to begin already here. I wanted to load up on cyclicals and take advantage of this renaissance in growth. I keep looking at Spanish and Italian PMIs that are better and feeling more excited about putting money into Europe. But you're telling me I should be heading in the other direction.
Yeah, in a way that's the conundrum and the irony and the paradox of investing. If everything is as good as it gets, then you have to position yourself for its softening. While the investor psychology is always, the market's gone up by 25%, banks have outperformed by 30% in the backdrop, then you say, okay, they've done so well, surely I want to be part of that party. But it's really like coming to a party at 4 in the morning, everybody's already drunk, and the question is that the moment to basically get yourself ready for action, or is that the time to pull back? And we think it's the time to pull back.
What about some of the other like markets around the Eurozone? I've been thinking a lot about the Swiss market, for example, heavy healthcare weighting that would fit with the defensive posture. Healthcare, one of the most undervalued sectors globally in MSCI world, and a potentially weaker currency as well. Is that an opportunity you see outside the Eurozone, and what else do you like in the kind of broader European space?
Yeah. So we are overweight the Swiss market, but we're getting a little bit more cautious because you've seen tremendous outperformance now, not so much because of the defensive angle, but simply because the Swiss franc has weakened so much and it benefits. So that overweight has worked well, but if you look at it relative to the macro models that you would set up, it now looks a little bit stretched. So perhaps you have to be a bit more cautious there. The other big defensive market in Europe is the UK, because of everything that's going on, the defensive angle, some upside that we see for energy, which got a large weighting in the UK, and the currency, where you still have the Brexit overhang. That still looks like a good opportunity for us.
What does putting a currency screen overlay on all of this tell us about the outlook here for companies with significant dollar earnings in Europe?
Yeah. So there's again this mismatch between what's going to happen to their earnings, and you can clearly see the pressure that is coming through now to the earnings revisions for the exporters and the dollar-based exporters. But what is more important for the trading and for the positioning you want to have is what's likely going to be the next move. And as David was saying, the very interesting fact that we have right now is that the euro seems very high relative to the interest rate differential. So if you look at 2-year interest rate differential, 10-year, it tells you that you have overshot. The euro has also overshot the target set by our FX strategists, who expect 117 by the end of the year. And so therefore I would say you have seen a lot of impact already, but the scope for another significant move higher in the euro seems limited here.